The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 30th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. It was nice to have a 4-day weekend out there just to get totally refreshed. So I hope you had a nice weekend as well. Of course, let's make sure that we do everything we can to have a magical, magnificent Monday. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, that one little 2x4 shift means that you and I can find the gift in every set of circumstance that life is going to toss at us. Today, we'll go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I as of about just past 1 o'clock on the East Coast in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. Most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email. I'll try to get to those as well inside the Tiger's Den. You can always ping me inside of the den out there, and we'll take a look at whatever it is that you're looking at. So let's go ahead and get things started on this magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off about 48 points. She's trading at 17,750. S&P is down 5 points at 2,085. A NASDAQ Composite off 24 at 5,103. Russell is off 4 points at 1198. The DAX closed up 88 points. She closed at 11,382. The FTSE off about 19. She closed at 63.56. Gold is up $9 right now, trading at 1065. Silver's up 6 pennies. Platinum is off a couple of bucks. Light sweet crude, basically flat, trade down at 41.78. Looks like natural gas has got to move on it here. I guess it was cold. I did see some football games, even last night's football game where it was snowing. No snow down here in Florida, thank goodness. Moving to the upside this afternoon, you've got Priceline leading the charge. That's up $9, less than 0.75%. Chipotle up 1%. That's up $6. BlackRock up 5.40. That's 1.5%. National Beverage Company. I do like their ticker symbol, Fizz, F-I-Z-Z. That's up about 12%. Don't recall ever looking at that equity, so I don't even know what's inside it or who that is. ITC Holdings up about 10%. That's up $3. Leading the charge here to the downside, you've got Regeneron Pharmaceuticals off $20. Allegiant Travel down 14. Google's off $9. Intercept Pharmaceuticals off 9. Biogen, that's off about $7. Lockheed Martin off 6. So plenty for us to go take a look at. Let's go try to figure out what the markets are doing as we speak right now. And what I mean by that specifically, we saw the markets move higher this morning. The only reversal pattern that I was able to identify, we'll take a look at it inside of the, both inside the NQ as well as the ES Mini. It might have even been inside the Russell and the Dow. But if we take a look at the 10-minute charts out here, that's what I've got on my screen if you're watching us on TigerTV. We can see the price was moving higher into about 8 a.m. this morning, doing it with less relative weakness out there. Now, this is just simply a universal pattern. You can use this on many different all different time frames that you want out there. You and I know we've gone back to the historical Dow information into 150 years. We've gone take a look at this pattern here for 150 years, and it works so well. Now, in this case here, the rubber band was being stretched, albeit on a 10-minute chart, but on a 10-minute chart, you stay within that 10-minute chart from a trading perspective. And as price moved down, you really got that reversal signal right here at about 8:40 this morning. Nice little bearish engulfing candle. A little bit of follow through to the downside. About 40 minutes later, no, 20 minutes later at 9:10, another bearish engulfing. We did see price go ahead and close below their TAS market profiles. We hadn't seen that for a while. That was a signal that, okay, some type of retracement was in place. Now what we've seen is we've seen price pull back. We've seen price make a low out here at about 12:10 this afternoon, and we've seen that same exact pattern. I would prefer to say pattern, and you would probably prefer that I say pattern as well. Made that same pattern that was at the top, now at the bottom. And who arrived? The cavalry. The cavalry in the sense that we had a nice little hammer candle that formed. That was at 12:20. We saw a nice little bullish engulfing candle. That occurred at 12:50. If we take a look at our market profiles, we can see that the point of control, little light blue line out there on my screen right now, that's closer to the bottom of the box out there. That says that, this is where the bulls, the buyers, should be trying to take a stance. Now, that says that price ought to go ahead and bounce up to 46.76. Maybe it moves beyond that. Maybe this pattern fails, for all I know. If it does fail and price moves lower, this same price relative strength divergent pattern may still be out there. But as we speak right now, it looks to me like the market is trying to form some type of at least intraday or short-term pattern out here. And we have the same thing going on inside of the ES mini. So it's not just the NQ. If we take a look at the ES mini out here, oops, let's put that actually on the screen. Makes it a little bit easier. You can see the same pattern setup out here. A couple of different candles. We just had a bullish engulfing candle at about 12:10 and some follow through to the upside out there. No hammer candle, but that doesn't matter. You just need to know your bullish and bearish reversal signals, and that's what took place on the 10-minute charts. Now, that may not be what's going on the other charts out there, but that was the only real reversal signals and patterns that I could find out there. Had a request from the Tiger's Den if I would take a look at the equal weighted ETF versus the weighted ETFs, and there's really 2 or 3 that we can look at. So let's go switch over to that. Let's go answer the question that was out there. And that question was, are there some divergent patterns in between those two? So as we take a look at my screen out here, we're going to look at the S&P first. We're going to compare the SPYs, the equal weighted SPY versus the normal SPY, the SPY that you would be traditionally trading out there. Now, the equal weighted SPY, the ticker symbol on that, you can do this as well at home, is RSP. That's the Guggenheim S&P equal weighted ETF. I believe there's a couple others out there. I think that Guggenheim gets the is probably the most traded. Although, I mean, we could take a look at volumes, but let's not worry about that. This is really just a tool, the way that Stevie likes to use it, to help us identify when there's some type of divergence. Now, what do I mean by divergence? If you take a look at the top, it doesn't work 100% of the time. It works like about, 90+% of the time. So you do want to pay attention to those diverging patterns. Now, if we take a look at right back here, the top portion of my screen, the blue squiggly line, and by the way, because we're using lines, this is just end of day data. It doesn't tell us what the intra day high or low was. It just tells us the close of the session out here. So we're only dealing with closes. We're not dealing with any of the extreme emotions inside of these charts. So the RSP, that's up at the top. And if we take a look back here on the trading day of June 18th, 2015, if we look at the RSP out here, what we can see is that on the trading session in July 16th, it was making a lower high while the SPYs were making a similar or greater high. That's what's known as a divergence out here, divergent pattern. And that's really what it is that you're looking for. Likewise, and here's one where it didn't work. And the equal weight ETF, when you see the divergent pattern, typically the direction that it points in, and I have to say typically because it doesn't work all of the time, is the one that's going to go ahead and give you the signal as to where price is going. Now, one could argue, hey, maybe this worked, maybe, but in this case here, if you take a look at the bottom on July 8th versus the bottom on July 27th, we see here that the RSP was headed in a southerly direction and the SPY was making a higher low out here. Now, of course, we had the August 24th, 5th, 6th, 7th sell-off out there. And maybe the two combined signals out here that we just looked at inside the RSP were actually giving us the go-ahead signal that there were problems to come. Now let's fast forward to where it is that we're at today. And you can see, if you take a look at the red arrows and the white arrows on my screen out here, you'll see several patterns that are out there that are really early warning indications to both you and I that there's problems. So now let's take a look at the most recent high out here from a closing basis. That takes you to November 3rd. And if we take a look at the November 3rd high, if you're looking at the RSP, that's up at the top, you can see at this stage here, price is not broken above that high. The same thing if we take a look at the SPY. Price is not broken above that high, so we don't have any kind of divergent pattern with regard to the way that the equal-weighted ETF, and the nice thing about the equal-weighted ETF is it is what it is, right? You've got 500 equities inside the SPY, and each one has an equal weighting, versus having Apple inside the SPY and having a heavier weighting out there. And more specifically, if we switch over and take a look at the Qs, this is where you would expect any kind of divergence to show up even sooner or quicker, because you're dealing with basically 100 stocks or 101 stocks out there, because of the alphabet soup, because of Google out here. But if we take a look at the QQEW, that's the first trust NASDAQ equal-weighted ETF out there. I believe Guggenheim probably has an equal-weighted ETF as well. But here, what we can see is there was a divergent pattern. There is not one that was in place today. And that divergent pattern was a signal that led to this little decline that we had coming into the middle of November. See how if you come all the way back here to the session of about August the 5th out there, that's what I'm using, August 5th, you can see that the Qs were able to make a higher high into the November 3rd timeframe. Whereas if we take a look at the equal-weighted ETF and we come down to that same, we can see that it was making a lower high out there. So that was an early indication warning that things were headed south or potentially going to head south. If we take a look at where we're at right now, there's no new high compared to that same date on November 3rd inside the QQEW, nor is there one inside of the Qs. So with regard to the way that Stevie likes to take a look at divergent patterns out there, it ain't there. So if the market, and if you're looking at it from the belief system that the market is going to crater, and you're looking for divergent patterns to communicate. Now, what's nice about the Qs is we know that the top 10 holdings inside the Qs. Well, let me give you the exact, because I don't, I'm no reason for me to just simply talk off the cuff here. Let's just simply go take a look at it. But the top 10 holdings, what the Sam heck did happen there? Well, that's interesting. I was going to take a look at it, and I don't know why that is. I'll try that one more time. Partner links. Give me a moment here. Looks like there may be, okay, well, that should work. Then this should work too. Okay, there we go. So the top 10 holdings, and this is where it's odd. I don't know. I've got to talk to the folks over at the e-signal out here, because they show 109 holdings inside the QQQ series. 101 I get. I don't get the 109. I'm going to assume it's just a misprint out here. But here's what we do know. No matter what. It doesn't matter whether it's 101, 100, or 109. The top 10 holdings inside of the ETF, the QQQ series, represents 51%, 50.86 to be exact out there. And that's why it's important to take a look at, these two. So the equal weighting says, hey, each one is worth what? 1%, right? Assuming that there's 100. So Apple has got no extra weighting in here. There's no divergence. None whatsoever. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Second question that came up was, is the Nikkei a buy out here? So if we take a look at the chart that we're looking at on my screen out here, again, we're using just the closing price. So I've got this on a line chart. Now, the specific reason that I have this on a line chart, many of you that have listened to the show from time to time or listen to it each day know that when we take a look at a stock like FCX, Freeport-McMoRan, that our contention is that when you are trading Freeport-McMoRan, you're trading the currency, the Aussie dollar out there. We've shown the correlation. Now what I've got up on my screen is the upper portion of this panel is the Nikkei 225, and the bottom portion is the Japanese yen versus the U.S. dollar. As the bottom panel is rising, this is the yen weakening against the U.S. dollar. And you can see the direct correlation. Again, it's not a tick for tick or pip for tick type of a tool that you can use, but you certainly can use it from a directional standpoint. Now, I would say that the currency pair is the one that rules, just like when we took a look at the ETFs, the equal weight versus the weighted ETFs. It's the equal weights that are really providing you with the stronger message out here. I would say that's really the same thing that goes on when we take a look at comparing the Nikkei versus the currency pair. So we've got this. The reason why I put this chart up on the screen, and what we'll do is we'll switch from this over to take a look at both the currency pairs separately for a pattern as well as the Nikkei to see what it does. This is just simply to be able to point out the direct correlation between the two out here. Again, directional correlation only. So you see that it's clear as can be. Now, let's go switch back and take a look at the actual individual charts themselves. Let's start off by taking a look at the Nikkei itself. The Nikkei closing up 136 points, down about 0.7% out at 19,747. So here's what you and I know about the, we almost knew about it. Here's what you and I know about the Nikkei out here. If we take a look at what it has done thus far, is off of the bottom down here in September 29th. Our bottom was September 29th as well, yeah. So oddly enough, or not oddly enough. In any event, we can see a clear A to B equals CD pattern, a nice little lightning bolt pattern that is in place inside of the Nikkei. Now, as it made the 1-to-1 pattern out here on November 6th, no bearish reversal signal or anything showed up. So that didn't mean that price was just simply going to stop there. In fact, quite the opposite on the very next day, because the very next day you had in essence a gap up or a wide ranging bar coming into the next level. I like to take a look at these lightning bolts, taking a look at the 1-to-1, the 1-to-1.272, a Fibonacci expansion, a 1-to-1.618, the second Fibonacci expansion, and then a 2.0, 1-to-2 move out there. Now, in this case here, we can see that price is above the 1-to-1.272, A to B equals C, even with yesterday's pullback out here. Price has gotten very near to the 0.786 retracement level. That price measured from the swing point high out here. And the reason why we're looking at that, that's the swing point high from August 11th down to that September 29th, is because the pattern that in essence set up on Friday, Thursday and Friday inside of the Nikkei was a confirmed Gartley sell pattern. Now, why do I say that? I say that because if we take a look at this candle session here on November 26th, as it was making its move up to the 0.786 level, remember, we just use these as guidelines, not as exact numbers out here. That was a little doji-style candle. Says that, price was getting tired right here at this downdraft that took place on August 21st. That nice little gap that's out there. So you had a wide-ranging bar. So it was coming into a resistance area. Then on the very next day, on Friday, out here, November 27th, nice little bullish engulfing candle. And then last night, some additional movement to the downside. So this actually sets up a Gartley sell. I don't know if it's going to work. We got to go take a look at the currency pair. But I can tell you that inside of the Nikkei, you actually have a sell pattern. That sell pattern would say that price ought to back off. Doesn't mean that it will, but it says that price ought to back off. And that's the first actual confirmed reversal pattern off of the bottom in this A to B equals CD to the upside. Now, nothing more bullish than a failed bearish pattern. So here's something else that you know about the Nikkei. This should move lower. Move lower to where? You just take a look at retracement levels. It ought to do at least a dead cat bounce, a pullback to the 0.382 retracement level, which would say right around 19,401. Whoa, what the heck is that showed up on my screen? I'm looking at the wrong. Let me do this here. My apology for that. I'm looking at the wrong retracement out there. Let's do this. It's not 19,401. It would actually be 18,812. That would be the retracement on a pullback. But remember, it is the currency pair that rules. So when we get back from this breakout here, let's go take a look at the Japanese yen versus the U.S. dollar. Let's go see if it's actually giving us a reversal signal as well. It's trading out at 123.13, because if it's not, then maybe what you've got is more likely a neutral signal than a reversal. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. Dow's off 23, S&P off 3, composite down 20 points. And so we were taking a look at the Nikkei during that last segment out here. We first started off to understand the correlation that exists between the currency pair and the actual indice. It is my contention that it's the currency pair that will rule the world out here. And therefore, if you're going to trade one, you really need to be able to, you don't have to actually trade the currency pair, but if you're going to go ahead and take a long position, you need to really understand what's going on inside that currency pair. And as we take a look at the yen versus the US dollar on my screen out here, what it had been doing is traveling in a little sideways consolidation pattern between August 28th. It finally broke out of that consolidation with conviction on November 6th. Now, the way that consolidation patterns work, or typically work, is once you bust through a consolidation, either to the upside or to the downside, there's typically a measured move. You take that consolidation box, high to low, just simply add it to the top or bottom, or whichever way the consolidation break occurred. In this case here was to the upside, and that gives us a price projection of where price is headed to. So that's really just one tool. Now, typically you'll see the move is going to be equal to or greater than the actual consolidation. So this says to both you and I that the Japanese yen wants to weaken even further, wants to get up towards that 125 level. Remember when we took a look at the Japanese, the Nikkei out there, and we went from a swing point high to a swing point low. We were close to the 0.786 retracement level out there. Take a look at this as we put that same Fibonacci retracement using, I believe, the same swing points. June 5th as the high, August 24th as the low out here. Remember how the Nikkei got very close to the 0.786 retracement? Hey, the Japanese yen hit it like right to the pip out here. The actual high of that trading day was 123.75, 123.76. The actual 0.786 retracement would have been 123.78. Doesn't get much sweeter than that. And then you saw price pull back. Normally, the way that these retracement levels work, and this is what you should anticipate, is that once you get to one floor, it's like an elevator system. You go from ground zero to the 0.382 retracement, price ought to stop. Once it gets there, price then ought to go to the 0.618, it ought to stop, pause, may not stop for a long period of time. Then it pauses, it moves up to the next level, assuming that it's going to continue moving higher, pauses. In this case here, we saw the pause. We saw a pullback on November 19th. This retracement is pulling back into that nice little sign of strength out there. It really looks to me as if what the Japanese yen wants to do is move higher. So even though we saw that Gartley sell pattern, we're not getting that same signal, in my opinion, inside of the Japanese yen. And therefore, the best position on this would be to take a neutral trade if you're not already in it. I certainly wouldn't be selling the Nikkei, not when we take a look at the Japanese yen not showing us the same kind of reversal out there. So that's how I would put those two together. Hope that helps you inside of the Tiger's Den. Now let's take a look at Goldilocks out here. We've got gold up $10, 9.7 to be exact, trading out at 1065.90. And what does it mean? What is it doing? Remember when we began the show, we were looking at just simply the 10-minute charts because they're the ones that actually gave me the best signal with regard to what the market is doing. So we're staying within those 10-minute charts out here. But with regard to gold, if we take a look at a 30-minute chart out here, what we're going to see is price had completed an A to B equals CD pattern, and it completed a 1 to 1.618 A to B equals CD pattern. Look at how that wide-ranging bar, this is back here on Friday. So on Friday morning at about, what was that, 8 o'clock, between 8 and 8:30, you saw a wide-ranging bar slice through the 1 to 1, the 1 to 1.272, 1 to 1.618. You know, was that the big flush out to the downside? It may have been. Nice little hammer candle that quite frankly formed at the 1 to 1.618 A to B equals CD. Since that hammer candle at 9:30, we've seen that low be defended, and price has now since moved higher. You're at 1065.80. Now, is that the bottom that was put in? Is this just simply a short covering rally? I don't know the answer to that, but we had completed patterns out here. Saw a nice little bullish reversal signal. That's on a 30-minute time frame chart out here. If I go take a look at the 120-minute time frame chart, let's see what we've got out here. You'd have the same A to B equals CD, so we don't need to do that. We can see several hammer candles out here. One that occurred at 12 noon, another that occurred at about 8 o'clock, 2200, 12, 10 o'clock last night. So we can tell that this low out here is truly being defended by the bulls. Now, on a positive note, if we look at the 120-minute time frame, what does this show? It shows that price is up above its TAS market profile on the 120-minute time frame. So that means you've got to go really to the next level to figure out where gold is likely to maybe run into some resistance. Let's put up the daily chart out here, and the first level of resistance is probably going to be the swing point that it had taken out from July 24th. That's at 1073. If I go try to take a look at some market profiles as well, let's go ahead and put those up on the screen. Let's take a look at the daily. So the daily says, daily and weekly say 1086 to 1090. So if in fact gold can get above 1073, there's absolutely no reason for it to not run up to the 1086 to 1090 level. The 120, we've already confirmed that it's above that. Let me try the 5-hour chart out here. This will take a moment or so to go ahead and populate, but I'll turn off the daily and the weeklies out here so that when it is populated, it's got to do all those computations, and with everything that I've got running in the background, there we go. So here's our 300-minute chart. Hey, price is above the top of that too, 1061. So 1073, gold should have no problem getting to the 1073 level. And above that, I already gave you the numbers on that. And we've seen, at least a short-term bottoming pattern, the completion of A to B equals CD, with the appropriate bulls showing up to tell you that that was a defensible or defendable bottom out there. And that's why we are seeing gold trade lower. What I don't know is whether or not this is just a bit of a, which I presume that it is. It's at least a short covering rally out here. In fact, if we just take a look at the GLD, let's go see what kind of strength we've got inside of this move, because you do have the U.S. dollar index moving higher today. So let's take a look at the other currency pairs as well. But if we look at just simply the GLD, volume today, 4.1 million shares. Let me see if I can pull up my calculator here real quickly. So 4.1 is the equivalent, says it's going to do about 8 to 8.5 in volume today to the downside. Now, we can't really measure. Certainly, the last couple of days will be tough to measure. Friday, a half a trading session. Thursday, a lackluster trading session out here. To the downside out here, which it has not taken out, this is November the 17th out there. There was about 8.5 million shares to the downside. That was the last big thrust. So we've got a kind of a it's hard to call it a sign of strength when it's really moving right up into a sign of weakness back on that trading day of November 17th out here. So, and we really can't look at the volumes over the last 2 days, which means we can't look at weekly volumes out here. We just have to use other patterns in order to really identify what is likely taking place inside of gold or the GLD. I mentioned the U.S. dollar index. It's traded higher. We've taken a look at the A to B equals CD patterns there. It has completed the 1 to 1.618, really to the pip as well, I believe. That price projection was 100.35. We actually hit 100.36 earlier in the day. Let me turn off those profiles. It'll make it a little bit easier. Give me a moment here to turn that off. Where is that at? There we go. Okay, now let's pull this back. Now, just because we completed the 1 to 1.618 does not mean that price is going to stop there. In fact, until we get a reversal signal, it's not telling us that. In fact, it's really communicating to me that price more likely wants to get to 101.19 as we speak right now. Let's go see what's going on inside of the euro versus the U.S. dollar. We took a look at the Japanese yen. That says to me that it wants to move higher. That means it's going to get weaker. That'll put some strength inside the U.S. dollar index. So if we take a look at what the euro is doing out here, the euro right now, this has no sign of any kind of reversal in play out here. All that it's done is, and I'm not worried about that 1.272 expansion. Let me just get rid of that. It's made a 1.272 expansion of the last set of swing points. Okay, $1.05, but that's not a signal that it has ended. Let me go ahead and turn that off. Turn this off. We're trading inside that swing point, inside of the euro that takes you back to March 16th, 2015. Once it broke through that 1.0619 level, short of any kind of bullish reversal signal out here, and it is not in the markets here yet, says that price ought to get down to 1.052. That's a swing point low from the trading session of April 13th. But I would have to say more likely than not, 1.0459. So that's going to go ahead and continue to keep strength, or should keep strength, inside of the U.S. dollar index, because you've got the yen, which I believe we took a look at that the other day, is like 13%. The euro is 50 some odd percent, 56, 52, somewhere around there of the U.S. dollar index. Let's look at the Great British Pound out here. Now, the pound, is trying to pound out a bottom. And if we take a look at that nice little descending price channel that it has been traveling in, it has actually made the bottom of that price channel. If we take a look at retracements as well, off of the low out here from April 13th to a high on the trading day of June 18th, you'll be below the 0.618 of that, but that little descending price. Now, look, if price closes below this price channel out here, it doesn't mean anything. It's not like it's broken through a trend. The trend is to the downside no matter how we take a look at it. As long as we're coming back into the trading sessions, it's been in this downtrend since the middle of June out here. So this doesn't mean that this is where price has to stop. But in this case here, it's possible that this has found a bottom, so that'll offset a little bit of the strength if it has. Otherwise, if it really hasn't found a bottom and it heads to 148, that too will go ahead and put some strength inside the U.S. dollar index. All we need to take a look at is the Canadian dollar, the Swiss franc, and the Swedish krona. No real reason for us to go and investigate those. We've got enough of the weighting structure of the U.S. dollar index to communicate to you and I what its intention is out here. So that ought to keep gold and silver in check. We haven't seen any kind of bounce inside of silver out here. So let's go take a look at Silverado, see what it is doing. Now, what silver continues to do is test the low from August 26th. And that low is priced out at, I'd tell you what it is if I could read it. That low is 13.95. You're trading at 14 buckaroonies right now. No bullish reversal signal or anything along those lines. If we look at the SLV, let's go see what it is doing. I guess I don't have that on my screen right there, but we'll go ahead and put the symbol in. Let's take a look at volume metrics. Again, difficult for us to truly analyze out here, but you've done 3.2 million shares. Last time down 4.7, so volume is actually not too bad inside of SLV, but it still trades inside. If you're going to use the ETF as your measurement tool, you'd be looking at the August 26 swing point. That's got 12 million shares. It's still trading inside it. That means below the high of 1358. As long as it trades inside, it says the work to the downside may not be over. That's what's going on inside of silver. So we've looked at the currencies. We've looked at, we started the show by taking a look at what was going on inside of the 10-minute charts to signal to you and I that there's a bottom that's forming. That has come to the fruition as we speak right now. You've got the Dow off about 19 points. Here's an interesting set of patterns, I believe. Let me see. Was it the 30-minute chart inside the Russell 2000? No, it was not. It must be the 120-minute time frame chart out here. Let's take a look at the Russell 2000, but let's first take a look at its signals. The Russell 2000, earlier this morning, it's been very strong out here. The Russell 2000 on the 2-hour chart was moving higher, doing it with less relative weakness, and it was doing it simultaneously, if I can say that like that. Can't say it fast, but simultaneously at about 8 o'clock this morning, it had, well, it wasn't really till 10 o'clock this morning that had confirmed a 7th wave move to the upside. Now, price pulled back, did what it was supposed to do, and it came back in essence to the bottom of its TAS market profile, that level of support 1194. Now, the Russell 2000 is probably where we want to go ahead and take our cue from, because if price closes above that high, not necessarily today, I don't expect that it will occur today out here, but if we see price close above that 7th wave move out here, that will be very bullish. That's at the 1208 number. I've got a little delay on this, 10-minute delay. We're trading at around 1196. I would imagine higher than that, a bit higher than that. But that's the pattern that you want to be watching for. That's the price point inside the Russell 2000 futures contract, that 1208 level. Now, if we go switch back over and take a look at the IWM itself, off 35 cents as we speak right now, what was interesting about the IWM was that it was able to clear its swing point. That's the swing point out here, the most recent one from November the 6th out here. That was at 119.36. Now, it cleared it on Friday, and it did it, of course, with extraordinary light volume because, hey, basically nobody was trading out there. So we can't really hold that against the IWM. It still cleared that hurdle. And price now has come back to test that level, which is 119.36. You're trading at 119.32. The volume on Friday was about 14 million shares. Today you've done 15 million shares. The swing point itself has volume of 35 million shares. It's still light. But even that being said, it's still light. You know, here's what we know about the IWM. It's broken through a descending correction channel out here. That's the yellow lines on my screen. You know, it's above a swing point. It looks like the IWM wants to continue to move higher. How high, you say? Well, retracement-wise says at least the 121 area, maybe 124. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off about 6 points right now. S&P down 1.5. And so to round out the show, let's take a look at a couple of individual stocks out here. Let's take a look at ExxonMobil, up about $1.30 with a volume of about 7 million shares. Now, ExxonMobil has a nice little pattern out here. Nice little rising. This is the daily chart that we're looking at, by the way. There's a couple of patterns out here. We got to look at them. So first, let's start with the daily. And on the daily, we can see a nice rising price channel out here. This really began forming around August the 24th. We can see that price was most recently at the bottom of that rising price channel here on November 23rd, just before Thanksgiving. Price from a volume standpoint, you've got 6.8 million shares today moving into this little downdraft that had 16 million shares back on November 12th. But it's really up above that little gap. So as long as it stays above that, so be it. It'll go ahead and move to higher ground. If we take a look at just retracements from high to low out here, it's already sliced above the 0.382 retracement. It's done that today. I did that about 4 trading sessions ago. 3 trading sessions ago. Looks like ExxonMobil on its way up to 83.80, then on its way up to 85.40, then 87.44, and maybe even beyond that. Now, if we take a look at the quarterly chart here for ExxonMobil, this thing here, price, if we come back and just take a look at a trend line, let's get our trend line tool. Let's make that a nice little green arrow. And if we take a look at a long-term trend line out here, inside, actually, let's do, yeah, well, you can see that price never actually made it down to the bottom of that trend. So that's pretty good. That was a trend line coming back into 1994. There's another trend line out here that's a shorter-term trend line. So let's use that. That's the one here from 2002. We can see how price came down and it tested, whoops, oh, what the heck happened there? There we go. That's that trend line. So price came and it tested the bottom of that trend line, which held. We saw price kind of move through that level. But the body of the candle, which is truly the essence of price, really is the one that gave us the signal. So price came down to a long-term trend. So ExxonMobil, quite frankly, looks like it has made a fairly major bottom out here. And that's taking a look at it on a quarterly basis as well as a daily time frame out here. XOM, of course, being the ticker symbol. Now, I don't know about the other ones. Let's take a look at Chevron, CVX being the ticker symbol out here. Let's go see what it is doing. Now, on a quarterly basis, it was not as strong, I don't believe, but let's go take a look at it as ExxonMobil. Again, we'll use that same. In this case here, we can't use 2002. We're going to use the 2003 trend line. And we can see how price had closed below it. And that was a quarter that ended September 30th. But you can see we're right back above that level as we speak right now. That says, hey, false breakout to the downside. If we take a look at CVX, again, Chevron looks weaker than ExxonMobil to me. But nonetheless, this is back above its trend line. This has a little rising price channel that's in place as well in it. Whoops, got to grab the right tool out here. So if you come back into the September 24th-ish type area, that's probably your trend line right there to the downside. To the upside is probably right around here. So price is likely on its way into about the $98 level, and that's in the case of Chevron. It's trading right now at $91.91 out here. What else do we want to look at? So the Dow's gone back to positive now. The S&P will turn positive here momentarily. And it's all courtesy of just simply taking a look at the patterns that were in place out here in the NQ and inside of the ES. Of course, we've had relatively quiet markets. Quiet markets mean you need to go ahead and move down to some shorter-term time frames for our signals out here. And that's what you and I did. So, folks, stay tuned. Our man David White's going to be up next. Thanks so much for joining us here. Have a marvelous Monday, and I'll see you on terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.